Over the past year, investors have driven up the value of Apple from around $1 trillion to nearly $2.4 trillion, which is the highest ever for a public company. On January 2021, Apple announced that they broke its own revenue record of $111.4 billion. The record is 21% higher than the last year revenue, and the amount also exceeds $8 billion of what analysts had expected, which result in higher expectation. However, after posting all of the record results, Apple's share is down more than 3%, which equal to almost $18 billion. This news has grabbed the headlines compared to struggling companies like GameStop, AMC Entertainment, and BlackBerry in the recent days. Part of the problem was that CEO Tim Cook and CFO Luca Maestri cited the COVID pandemic and decided not to provide the kind of precise revenue forecast for the quarter starting 2021 that it did before the pandemic. Maestri also stated that Apple's wearables and accessories could decelerate and that business was particularly strong in 2020. Another issue is that Apple's net big move is not yet visible to outsiders. Reports suggest that the company is working on electric cars and virtual reality gear, each of which could open another significant market for CEO Cook and his team to conquer over the next decade. However, CEO Cook did not give anything away regarding Apple's net big move during a conference call, and he chose not to comment anything on this matter during an interview.
Hi Miss Shumin, hi Miss Tanya. Are you guys watch the news about the fall of Apple share price? I'm so shocked,
Hello, Mr. Shafi and Mr. Min. Yes, I watched it. I'm also very shocked about the news.
Hi, Mr. Shafiq and Ms. Tanya. Yes, I'm also watched it. I think it's a little bit weird because CEO Tim Cook has announced that Apple revenue was increased more than what analysts has expected.
For me, I think it's normal, Miss Shumin. Let me explain to you the role of accounting information in the capital market. In the capital market, the accounting and other financial information plays important role to determining the share price. The conclusions are made about the market reaction to particular information released, which will determine whether the information was relevant and useful for investment decision making. The favorable reaction is when the share price of the company goes up the moment when the news is released, while unfavorable reaction is when the share price comes down when the market participant heard about the news. In the Apple case, we didn't see the increase of the Apple share price despite the company meet the analyst forecast, as there is no longer element of surprise in the announcement, as the information have already been incorporated in the Apple's share price. As we know, analysts often do forecasts quarterly or annually based on the information that they receive every day, and the source of information can come in different ways and sources. According to research from Ball and Brown, prior to an earning release, investors will obtain much of the data information that they need from other sources such as analysts, business news, and financial journals. This research supports that meeting the earning estimate is not a sufficient indicator that the share price will go up. This is because when Apple announced officially about the increase in the revenue, a lot of those information already absorbed by the public, and that information has been translated into the share price. This can be seen in steadily increase of the Apple share price, as this indicate that the information is slowly transferred to the market. However, the Apple share price went down after the CEO Tim Cook announced the number because he was reluctant to share some development and progress that the company made. CEO Tim Cook also not exactly telling what is their project in the future, and analysts took that as the CEO not having a concrete plan moving forward. The investors react to this news as it contains the surprise element, and this can be seen in the fall of Apple share price. In this scenario, the investors will have less confidence in Apple as there was less information made available to public. For example, investors will become more convinced with the explanation of the newest technology by Intel and AMD compared to Apple, as both companies announced the technology that they use to the world.
Thank you, Mr. Shafiq, for your explanation. Now, I understand that the accounting information play important roles in the capital markets, as investors can obtain much of the information that they need from other sources even before the official announcement was made. Okay, next. I think the fall of the Apple share price also can be explained using the semi-strong form expression. This is because we must assume that the capital markets is efficient and market adjusts rapidly to impound fully information into the share price when the information is released. In this theory, only material non-public information (NMPI) is considered useful. That explains why Apple's stock price remained consistent after the financial report was discussed on 27 January. And it only declined following the earnings call on 28 January. Tim Cook chose not to reveal any future plans to the public during the interviews, as the NMPI in this situation is the information from the earnings call regarding the rejection of the future plan disclosure. There are also several reasons why the market decided to sell Apple stock even though the revenue was doing far above the expectation. First, although there was a significant rise in sales over the prior years, Tim Cook highlights that this was mostly due to an increase in iPad and MacBook sales income. However, this also caused doubt on the existing sales statistics, which are already quite high. And next, while Apple is performing much better, but when compared to the broader market, for example S&P 500 companies, its performance is actually down by 15%. And last, when Tim Cook was asked about the self-driving car and AR/VR glasses during the call, there was no clear trajectory that on the new product line. Apple's income is also primarily sales on just a single product line, which is the iPhone, and this raised investor concern about Apple's innovation. As a result, the markets was generally reacting to this information, and this reaction was reflected in the share price.
Yes, Mr. Min, I agree with you that the fall of Apple's share price can be explained using semi-strong form efficient. This is because all publicly available information, including those available in financial statements and other financial disclosures, is rapidly and fully impounded into share price in an unbiased manner as it is released. Next, let me explain to you why accounting information plays an important role in the capital market. Because the stock is affected by many factors. The value of the stock in the market changes a lot. Among these factors, many investors can frequently or directly use the accounting information published by the company. The accounting information is the main source of stock market information, is a direct factor affecting stock price, but also the main source and the basis for many investors to make investment decisions. That is, the stock value of all available information on the market is accurate and fair. As a result, stocks always trade at fair value. If the price of a stock goes up, people who own it will always want it, and investors will slap it up. This will cause the stock price to rise immediately. Price fluctuations are unpredictable, and as the price changes, it is precisely mainly relational investors who develop relevant information. Stock price reflect all available information in an unbiased manner, so the efficient market hypothesis can explain the fall in stocks. In the case, CEO Tim Cook decided not to provide a quarterly review forecast starting in 2021. In response to such negative information, Apple's stock price fell.
Thank you, Ms. Danielle, for the explanation. Yes, I agree with you the reason why accounting information play important roles in capital markets. Actually, I want to share with you the latest news about a local company which its share price also fall after the company announced the second quarter net loss. Its second quarter net loss widened to RM 121 million from 19 million a year earlier. The local company that I mean is Post Malaysia Berhad. Post Malaysia Berhad's current share price is claimed to be the lowest in about 17 years, and such feelings had led to the notion that the company's negative update have been largely priced in its shares, which are seen struggling with the group's latest reported wider net loss. It is an unfavorable reaction as the share price of the companies come down when the market participants heard about that news. A company's core net loss is divided by excluding extraordinary items in the firm's financial statement. Hong Leong Investment Bank Berhad has analyzed that Post Malaysia Berhad's first half year of 21 core net loss is RM 107 million, was below Hong Leong's and consensus expectation. Based on Hong Leong's and consensus full year core net loss forecast of the 106 million and 65 million respectively for Post Malaysia Berhad, Hong Leong maintains its whole core for the Post Malaysia Berhad shares, but with a lower target price at 76 cents from 86 cents previously. They choose to ignore the hour-to-hour noise, confident that a good company's stocks will over the long run and go up. Meanwhile, Tenaga Investment Bank Berhad, which maintained its Post Malaysia share target price at 80 cents with an unchanged market perform core, has also widened its net loss forecast for the Post Malaysia Berhad. For the immediate terms, Tenaga Investment Bank Berhad expect the lockdown to continue raging on the postal and logistics segment, but anticipate it to fully end by December while they maintain the year 2022 net profit in post-pandemic recovery. Nonetheless, changing the news is not a good stock picking strategy for the individual investors. In most cases, professional traders react in anticipation of an event, not when the event is reported.
Thank you, Ms. Jumin, for your sharing about the news of Post Malaysia Berhad. It is very interesting. If the information is relevant, important, and useful to investors, we will see the market favorable or unfavorable reaction in the change of the share price. As Ms. Jumin and Ms. Tayal mentioned earlier, we must assume that capital markets are always efficient. Why we must assume the market is efficient? The reason is because unless the assumption is accepted, it is hard to justify efforts to link security price movement to information release. If the particular information leads to a price change, then the information was useful and caused investors to revise their expectation about the future earnings. If the market is efficient, investors will use whatever information from various sources in predicting future earnings or future expected cash flow, which can determine the current share price. As we know, the share price today is the function of future expected cash flow, in which it will help us to determine whether to buy, to sell, or to hold the share. As I stated earlier, if the information already known within the expectation of investors, and the announcement or that piece of information will not invite any reaction from investors. So this can be related to Apple as the investors already anticipated the information about the increasing in the revenue when they computed the future expected cash flow even before the official announcement has been made. The Apple share price is not increasing because the announcement not has any useful information content, as the content in the announcement is already accounted for when the investors made prediction about the future expected cash flow. In fact, during the announcement, CEO Tim Cook also refused to share some of the development and the progress that they made and did not explain convincingly of their plan moving forward. Analysts took that as the CEO did not have a concrete plan moving forward. As the result, the investors react to this new information in computing the future expected cash flow. Most of the investors just cash in as they think the future expected cash flow of Apple will become low, and it is better for them to cash in now to receive a high capital gain.
Yes, Mr. Shafi, I agree with you that we must assume that market is always efficient because, as you mentioned earlier, if the assumption is not accepted, it's hard to justify the effort to link the share price movement to information releases. However, in reality, I do not think the market is always efficient because there is an extent of information asymmetry, and the information also can be interpreted differently by different investors. Information is the main source and the basis for investors to make an investment decision. But in practice, not all investors can get all the information in the timely and fair manner. In other words, markets are not always efficient. There may be information asymmetry between them. Information asymmetry is when people in a transaction have a different information. There is a term in the stock market called insider trading, which refers to the trading of publicly traded stocks based on non-public information. This gives some parties in a stock transactions information advantages over others. When one party has more information than the other, they use that information to make a better decision because markets are not always efficient. Non-public information refers to information distributed through unofficial channels, which can only be obtained by investors at a certain cost. Some important non-public information can reflect the stock price, but not all information is considered useful to investors. That's because investors get information that can be interpreted differently. In this case, the report shows that the company is working on electric cars and virtual reality gear, but Google didn't reveal everything. So it led some investors to think that there is no clear forecast and they decided to sell. Of course, some investors will buy more of Apple's shares because in the case of electric cars and virtual reality gear, each of them could open up other important market for CEO Tim Cook and his team over the next decade. This mainly make some investors think there will be more income in the future as the stock price rise. So one of the reasons Apple's stock price is still falling is because many investors are rejected to take on risk because there is no clear project forecast.
Yes, Ms. Tangya. Somehow I agree with your argument that the market is not always efficient. Overall, I think from our discussion just now, we can find the answers why the Apple share price went down despite its spectacular earning records. Thank you, Ms. Shui Min and Ms. Tang Yao, for your time.